What's the deal with credit unions? They seem to be popping up everywhere. And as a lender, there are credit unions doing amazing things supporting their community and their home buyers. Well, for today's episode, I have a friend, a fellow CMB, and someone who knows credit unions better than most because he sits at the head of one of the largest mortgage-specific credit union organizations in the country. If you want the scoop on what it's like to work at a credit union, what's the future of credit union lending, and why are credit unions able to do all the cool things that they're able to do, well, this episode, it's for you. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest all the way from the DMV. He's a fellow CMB. He is my friend in the mortgage industry. He is a father of three. He loves to make his home brews.
Yep.
And he is the president of ACUMA, which is the Credit Union Association for Mortgage Lending. He's the one, the only Peter Benjamin. Peter, welcome to TLOP.
Dio, thank you very much for having me.
I'm excited. This is like 2 years in the making, if not three.
That's right. That's
2
right.
years in the making, if not three. And I'm fortunate because you are in town currently for a conference, right?
That's right.
What conference are you in town for?
Florida Credit Union Real Estate Network Annual Conference.
Okay, Florida Credit Union
Yep.
Real Estate Network.
That's right.
Okay, so I'm a Floridian, right?
Yes, you
That's
are.
how we're able to do this because you're in town from the DC area. We're in Orlando, Florida. So that would be like Addition Financial.
Yep.
That would probably be my credit union. People don't know this about me, but I actually bank with a credit union. Shout out to Insight Financial Credit Union. That I'm guessing would be Mid-Florida Credit Union. Shout out to all my friends at Mid-Florida Credit Union. I actually had an opportunity to do a private workshop for them earlier in the year. So they're definitely fans of TLOP. Who else would be Fairwinds Credit Union?
Fairwinds.
Okay.
Partners.
Oh, that's the Disney Credit Union.
That's right.
Partners Federal
That's
Credit
right.
Union. Okay.
Probably have the best benefits on earth.
Do they really?
Yeah.
Oh, okay.
They
Look,
get,
if you're-
free access to Disney whenever they want.
Oh, there you go.
That's
So
right.
if you're looking for a career opportunity in the mortgage space,
That's right.
right? We're going to talk about this on the episode. The mortgage industry includes credit unions.
Yep.
And I think so many times people discount that as a career opportunity. You were jokingly saying, look, you work for Partners in Orlando, Florida, actually Lake Buena Vista. Then, yeah, could you imagine getting free park passes? That's pretty awesome. That's a cool
and
perk.
hotel stays.
And hotel stays?
Yes, they do.
Nice. Very cool. So you're in town for that conference.
Yes, I was.
Anything exciting coming out of the world of credit unions, or is that what we're going to talk about today?
I think that let's talk about that.
Okay, we'll talk about that today because you have your own conference coming up.
I do.
Okay, walk the audience through ACUMA. What does the ACUMA stand for?
All right. So it's the American Credit Union Mortgage Association.
American
Credit Union.
Credit Union
Mortgage.
Association.
Got it.
And it's ACUMA, not ACUMA.
That's right.
I used to always mispronounce it ACUMA, but it's ACUMA.
ACUMA.
Okay, and you all have your conference
Yes, we do.
in Denver,
Denver.
October?
September.
September. What are the exact dates?
21st to 23rd.
September 21 through 23.
Yep.
And this is open to all the members of ACUMA.
Any credit union member or non-member can attend,
Okay.
but as vendor members only.
Vendor members only. So like if you're an MI company, like shout out to my friends over at ArchMI.
Correct.
I can only imagine ArchMI is going to be there.
Absolutely.
And I 100% know that National MI is going to be there.
Absolutely.
Because my boy Wreck-It Ralph Remy, okay, we call him Wreck-It Ralph. You know who named him that?
Who?
You met him, JC, John Coleman. The guy that produces the show named Ralph Wreck-It Ralph.
I love Ralph.
Everyone loves Ralph, but it's a funny story that we'll have to tell off air. But I know Ralph's going to be there because I'm going to be there.
That's right.
Yeah, I got the invite, which I love because I love this opportunity to provide, training and coaching and resources to the lenders that work for credit unions. But I know that National's going to be there because Ralph and I are doing a panel together.
That's right.
All right, so September 21 through 23, Denver, Colorado, for all credit unions, whether you're a member or not. But if you're a vendor, you have to be a member.
Correct.
But memberships aren't that expensive.
Absolutely not. $1,000.
Little a month?
A year.
A year.
A year.
$1,000 a year.
A year.
You know, you can't even join our coaching company for $1,000 a
For
year.
less than a cup of coffee a day.
Yeah, honestly, it is less than a cup of coffee
You
a
can
day.
join ACUMA.
Yeah, like literally, if you wanted to become a member of our coaching company, which we are like the number one value in coaching, because we're $3,000 a year when everyone else is $3,000 a month, and I'm proud of that. But I do have an request for proposal, right? RFP out to a national lender where I'm like, look, if you buy 100 of these, I'll sell it to you for $1,000 a pop.
That's awesome.
Right? Yeah. If they're going to buy 100, I'll be more than happy to cut a deal, especially right now because we're just getting started. But that's me going down a rabbit hole we don't need to go down. So let's talk about the conference you were just at. Let's talk about the conference that you're going to be putting on,
Okay.
which give me an idea because I'm going to be there, which I'm super stoked because I love Colorado and I can only imagine how beautiful it is in September. How many people do you anticipate at your event?
500 to 600.
500 to 600.
Yeah, approximately 60% credit unions.
Okay.
We'll say 30% vendors, and the rest will just be general speakers like you.
Okay.
Okay.
Yep. Gen Pop. You call me Gen Pop.
That's Gen Pop.
Okay.
It's for us. Whenever we design an agenda, it's about two things. Yes, it's about mortgage. Yes, it's about our attendees, whether you are a vendor or more specifically a credit union. Yes, we want you to walk away understanding everything that's happening in our industry. That's first and foremost number one. But I think what you're going to find inspiring is that the first session we do, not so much the Sunday night opening ceremony, but we'll talk main stage, day one, and the very last session that we do Wednesday. It's all about personal development. Everything that we do every single day has something focused on personal development because we recognize, at least I recognize, and I think you can relate to this, we are fathers, mothers, neighbors, brothers, sisters, etc. And so our conference, it's called the Make Your Mark Conference because we want to focus on everything that has to do with our ability to make our marks in our community, day in, day out. And so our Monday morning session is focused on how do we make lasting impacts in our community. Our Tuesday morning opening ceremony or opening sessions based on how do we make lasting impressions within our organizations. And then new this year, our only session that we have is what we're going to start off with what we call ACUMA X, where we invited 6 people to apply to become basically public speakers.
Oh, wow.
Yeah, so we had
Like coming in from the credit union world,
it could have been,
but they want to start giving back to their industry?
it could have been any one of our members.
Okay.
So we had vendors, Peter Hurst as an example. He's going to be one of our speakers.
Okay.
A fellow CMB. He applied, and another CMB, Mary Zidlow. She's another one of our ACUMA X speakers. But we had over 40 people apply to be one of these ACUMA X speakers, and of that, we selected 6 people to share their stories of personal development, of something innovative, you name it. But they each get 10 minutes to share their stories to inspire our audience. So,
Oh, I see. Okay. I thought it was more of a workshop to like become a better public speaker.
no,
As if you're like rolling in Renee Rodriguez and Renee's going to teach us all about our signature story. No, these are 6 people chosen to come and share their personal story on stage. And that personal story is one that's supposed to maybe make my heart smile, maybe make me want to leave and be a little bit more encouraged to get after it or go conquer my fears.
that's exactly it.
Okay. Very cool. And you have 2 CMBs on there.
Absolutely.
I love it. For those that don't know, a CMB is a certified mortgage banker. It's, in my opinion, it's like getting your master's degree in the mortgage industry, and it's the highest designation that you can obtain.
Yeah.
Right? It doesn't help you make any more money per se. People always ask me that. Oh, Dio, you have your CMB. Peter has his CMB. It's how we actually met through the CMB Society. Do you make more money because of it? I'm like, no, not necessarily. Right? If I wanted to make the most money, I would just go fund the most loans. I mean, that's the easiest way to make the most money, but it does give you a certain level of understanding of our industry where, yes, we understand how the sausage is made and we know how to sell the sausage.
That's right.
As well as package it and as well as prepare it. And we can give you 9 different recipes on how to make the sausage taste different, although it's still the same sausage that was made the same way, right? Like that to me is what it is. And if anyone's ever interested in it, you obtain that designation through the Mortgage Bankers Association, which is how Peter and I did it. It's actually how Peter and I met. So if you hear us throwing out, oh, so-and-so's a CMB, so-and-so's a CMB, they're just a part of this cult-like secret society that we also are a part of.
That's right.
Yeah.
We have a, Illuminati type handshake. Yeah. And other than that, we wear, the robes every once in a while, but outside that, it's.
I mean, if you see Bob Nemi, Bob will make sure you have a koozie, right? And we all do have a special koozie that you can only have access to if A, you know Bob, and B, you're a CMB.
Well, we also have socks.
Yes, we do have our own special socks.
And you always have to question a CMB when they don't wear their pin.
It's funny. I wear my pin just about always. However, there are times when, depending on the event, I don't wear it. But I probably should. I should be questioned. I should be that guy that's like, hey, where's your pen? Why are you not wearing it? Because it is a badge of honor. Like I wear that thing with pride when I'm at an MBA function, which I probably attend 12 of those a year now, usually 2 as an attendee and 10 as a speaker, which I'm honored that, MBAs want me throughout the country to come and provide value to their members. But yes, I will rock my pen there. I probably didn't wear it in Mastermind Summit when I was in Vegas a couple weeks ago, and I probably should have.
Now, this past event, I was one of 4 CMBs there. Day 1, I was the only CMB wearing my pin, and every single one of them came up to me and said I should be wearing my pin. It's in my hotel room. I'm like, what can I say?
Well, if you ever need a pen and you're a CMB, I probably carry 5 on me at all times.
Always.
Yes, at all times. All right, so let's do this because I do want to dive into the world of credit union.
Please.
Because so few of us in the TLOP community really understand it. Now, we have guys like Troy Arnold, who, he's a credit union lender. He's a all-in hardcore TLOPer. He's gone through my branch manager boot camp. Troy's one of my favorite stories to tell because he took the information I was giving on the podcast, or he took the information I was sharing through our coaching community, and then using that and pushing it down to his lender reps, right, within his credit union. So, I know more about credit unions than most, but a lot of our audience, they don't know. And if they do know, it's not in a positive because usually it's like, oh, I lost a loan to my local credit union, right? It's kind of in a not positive way. But I would like for people to understand, like, what are credit unions doing today? What are credit unions going to be doing in the future, or better yet, what they should be doing if they listen to you and the other leaders within the space? And then, what's it like working for a credit union? I think our audience would like to understand all 3 of those better. But before they do, can we spend 3 minutes getting to know Peter Benjamin?
Sure.
Like, just walk me through. You entered into the industry. Like, where were you in life and what phase of the industry? Did you start as an underwriter? Did you start as an LO? Like, walk us through the beginning of your career.
Good question. So I'm sure like many of everyone out there, I kind of just fell into the job.
So you didn't go to school for mortgage?
No.
Okay.
No. I was essentially a bitch boy at a law firm.
Okay.
Whenever they needed the water jug changed or paper put into the copier, they called me. I did lunch runs, all that stuff. And
were you trying to become an attorney? Like, was that kind of the goal?
No,
you just needed a job and they were hiring.
Yeah, I was working my way through college.
Okay.
And they had flexible hours that allowed me to sit at my desk, do my homework between putting jugs of water on the water station. But my best friend, who had just graduated, said, "Hey, I work at this at First National Bank of Arizona. Shout out to all my FNBA friends. It's like a frat party over here. Come over and have a job interview. You're miserable at your current job." I'm like, okay, cool, I'll do that. And so I go, and it wasn't a job interview. It was, this is where you're going to be sitting. And I never looked back.
Wow. So it was like more of like a call center LO type position? Were you smiling and dialing, or what were you doing?
I started off in basically a setup type position, running their, what they called Avenue was their AUS system. I started there, promoted, and this was in the wholesale side of the business. Got promoted through to the wholesale account manager, went all the way up to account executive within First National Bank of Arizona. Then transitioned, once they shut down, I transitioned to a retail broker loan officer.
Okay. Like you were out calling on realtors and financial advisors to refer you. Okay. Yeah. How long did you do that for?
About a year and a half.
Okay. And this was like early 2000s?
2007, actually.
Oh.
Tough time.
Oh, we were walking into the bloodbath at that standpoint.
Yeah. No,
okay.
It was in the middle of the bloodbath. FNBA had shut down because...
of the liquidity crisis was hitting already.
Yeah.
I guess you're right. I'm trying to think of my timeline because 2006 was my breakout year. Like that was the first year I did 100 units. I think it was like for back then 26 million. Now people would laugh. It's like if you're doing 100 units today, you're probably pushing 40 million in most markets. And then then 07. Yeah. Okay. Yeah. Because 6 and then by 7 is when I found myself with 3 employers within the same 12 months, not because of my choice, but because they couldn't stay afloat.
Right.
Okay.
Right. But for me, I leveraged the connections I had when I was an account executive to get some business. My family was in real estate, so I leveraged some of that. But again, I much rather have transitioned to something a little bit more stable, especially 2007, 2008. So I went to Navy Federal Credit Union, where I was in their training department for a little bit.
Okay, so that was your first stint with credit union, with the biggest credit union,
the big boys.
Who's bigger, Navy or USAA?
Well, USAA is not a credit union.
They're a bank.
They're a bank.
Okay, so the Navy is the number one credit union in the country.
Number one.
Okay.
Was there for about 3 years, and actually went to Churchill Mortgage.
Wow. Yeah, you and Dave Ramsey used to hang out.
Yeah. Absolutely. Okay. Best friends. Read his book, drank his Kool-Aid. After that, went to Capital One.
The credit card company who is constantly in and out of mortgage. Constantly in and out. They just pulled out again.
Yes,
because they were in HELOC, and now I just read they pulled out of HELOC.
Yep.
Okay.
I was actually part of Capital One right after they acquired Chevy Chase Bank.
Yes, that's a Maryland bank, and you're a Maryland guy.
That's right.
Okay.
That's right.
It's all adding up for me now, Peter.
Right. And they're a Tyson's Corner company, so they're right there in Northern Virginia.
Okay.
So as part of their acquisition of Chevy Chase Bank, they brought me in because of my training background, but also my other extensive background to help figure out, okay, well, how was Chevy Chase Bank so successful? Because Chevy Chase Bank also had not just retail, they also had correspondent, they also had wholesale. And so they wanted to replicate basically Chevy Chase Bank's success.
Yes. Well, they acquired them, right? So that would probably be the goal of acquiring them. Is there certain assets or departments they wanted access to?
Right.
Yeah. And your background was account manager, account executive, retail loan originator, corporate trainer.
Right.
So yeah, you check just a couple boxes.
Just a couple.
That Capital One would like to have.
Right.
Okay.
And they had me in the change management side. So just assessing processes. Then they moved me to Texas. So I was there for about 5 years.
What part of Texas?
Dallas.
Okay.
Dallas. It was hot. Too hot. I can't do this.
Says the guy who's wearing a hoodie inside of the studio, which, by the way, if you're watching this on YouTube, the studio is hot AF, like always and forever. And I'm looking over, I'm like, man, you're wearing a hoodie.
It's not that. It's a thin hoodie.
Okay, it's a thin hoodie. Yeah.
It's travel day, man. I'm going to go hop on an airplane.
Yeah, you're heading home after this, aren't you?
Hop on an airplane.
Yeah, but yeah, so I was just thinking if Dallas is hot, I can only imagine Florida's even hotter. But
it's humid here, man.
Super humid. So you spent five years in Dallas.
5 years in Dallas.
Okay.
Got sick of that. Moved back home. Worked for Prosperity Home Mortgage, where I was once again in change management. Then I went to Burke & Herbert Bank, where I ran operations and eventually the entire mortgage division. Then I went to Lafayette Federal Credit Union, ran their entire mortgage division for about 5 years.
Lafayette, like out of Louisiana? Whenever I hear Lafayette, I'm thinking French, right?
Washington, D.C.
Which makes sense. I mean, Lafayette, the historical figure, was in the D.C. area, New York, D.C., because he was here helping us win the Revolutionary War.
That's right.
But I just hear Lafayette and I just think Louisiana, or I think Quebec, right? I'm going French immediately.
No, they were original. They named their credit union right after Lafayette Square.
Okay. Yeah.
So,
all right.
So.
And then was it from there that you then found yourself being the president and CEO of ACUMA?
Yes, sir.
I almost said ACUMA. Almost did it.
It's all good.
Yeah. Every time I'm just going to stop, I'm going to slow down and say ACUMA.
That's all good.
And you've been with ACUMA now for how long?
3.5.
3.5,
Yeah.
right? And so you are like the head. Like you get to run the show over
I mean,
there.
I have a board ahead of me, but yeah,
Oh, okay. All right. Is that because you're a nonprofit?
we are.
So because you're a nonprofit, the board's actually in charge, and then you are the bitch boy all over again.
That's right.
Full circle. Full circle.
No, I mean, I got a great board. I got a great board. Fellow CMB, Jason Sassner's on the board.
Okay.
You know Sass.
Yes. Yeah. No, very cool. All right. So that's a background for the audience to just understand, like, hey, who is this guest? Why is he here? And why should we listen to him? Yeah. Dude's been at this for like 20 plus years. Has I love your vast array of experience, which allows you to pull on both things historically as well as different business models. A fun fact about Peter and I, for 2 years, you and I got to do the Future Leaders together. We had to judge Future Leaders, which is when I really got to know you on a professional level. And it's funny. I think it's because of my tonality. People are more afraid of my questions, but they should be more afraid of you, right? I think you take a softer approach, but your questions to me are more hard-hitting and granular. I think they just get, whether it's my voice or my tonality, they sometimes get a little nervous. But I thoroughly enjoyed that, and I hope next year I can do it again. This year it didn't work out. Are you doing it this year? Are you judging Future Leaders? So who's judging with you? Do you? Because Marina was out this year too, right?
Yeah, she's out.
So it's you,
Jen Green,
and Jen. Shout out to Jen Green.
And 2 people I don't know their names.
Oh, okay. You haven't met them yet.
Yeah.
Okay. Well, maybe next year I'll get invited back.
Please do.
It didn't work out this year.
It's okay. I understand.
But anyhow, all right. So let's get into the meat and potatoes. What's going on in the world of credit union? We'll start with what's going well in the world of credit union, like from the mortgage lending standpoint, whether it's someone who's seeking a career opportunity, that would probably be the number one reason that our audience would want to look credit union. But what are some of the pros of working for a credit union?
For me, it's if you really want to focus on making that transition to something that's extremely stable, that offers you an outlet with great products. For me, it's all about the culture. Culture with credit unions is it. We hire for culture, number one. And that's why you come to a credit union. It's about putting families in homes and nothing else. And for me, that's what sold me eventually on credit unions and had me stick with this process. I worked for Prosperity Home Mortgage, and it was great. And I am thankful for the leaders over there. I worked for Capital One. I'm thankful for the leaders that I worked under over there. I had a great mentor, actually, Mary Rezidlo. And I forgot to mention I worked for a community bank just out of North Virginia, and I had a great mentor there. But I didn't really find my niche because, as you mentioned, Capital One, in and out, right? Prosperity Home Mortgage was going through a tough time because they had just broke away from their joint venture with Wells Fargo, and they were trying to figure out their own identity. And at the community bank I was going through, they didn't care. It was all about the profit. It was all about being in the black. It was all about, giving a loan to the CEO's best friend.
Okay.
And it wasn't about helping the community. The second I got to a credit union, it was, all right, let's really find a way to help our community. Let's really find a way to help our members. And, let's come in and really support each other along this way. It's about how can we develop a program that gets us into a community and really supports their needs. And that's all we did. It's just try to find a way to support them in their life journey. And it's like their life journey.
Have you found that associates who work for credit unions, are there any stats? Do they have a longer tenure versus other industries, whether it's IMB or broker?
I mean, it's
or is it pretty similar?
It's tough to say.
Okay.
If you look at my board as an example, my board chair currently, she's been with her credit union for, I think, 40 years.
Okay.
I mean, that's a long time. And when I was at Navy Federal, I worked with people who had been there for almost 50 years. Like, they celebrate them with like watches. Like, it's people at credit unions just don't leave.
And that's why I asked the question, because I've noticed that, I have friends over at Partners Federal Credit Union, and some of them I would love to call my teammates. They ain't leaving. Like those that are there, they are not leaving.
Right.
So I was just curious, someone who studies the industry, as much as you study it, but you get to work in the credit union side. If you saw that, if the average originator stayed with their employer 3 to 5 years, is credit unions like 7 to 9 years, or are they also 3 to 5?
No, it's much longer.
Yeah, because of the culture, right? Because you're going to choose working for a credit union because you want to be a part of that culture, and you can still make great money. I was at an event in Iowa, and there are plenty of men and women who make phenomenal living as a lender working for a credit union.
It's not just that; it's the overall benefit, right?
Oh, you're trying to go like work-life balance and mental health and emotional health.
You get that work-life balance. That's key, right?
Yeah.
You get one life.
Yep.
Right.
That you remember. I always joke with my kids. I get one life that I remember. Like I may come back as a unicorn or as a dolphin.
That's right.
But I won't remember my human life.
That's right. You have one life that you remember. But if I could have an opportunity to not travel so much and go back to that time when I was at a credit union where I could actually shut down at 5 or be home at 5 every single day, that'd be great.
Yeah.
Right. Whereas at the credit union I worked at, focused on that. My boss would say, if I was in the office late, he'd say, "Go home." Now that I am the boss, I can't do that. I'm checking emails like on Saturday and Sunday mornings. But I worked for a credit union that had free healthcare, right?
Free
healthcare.
Yeah, if it's free, it's for me. Sign me up.
Seriously, right? And plus, they also had an amazing 401k. They also had a profit share plan. It was designed. Their general benefit package was designed to keep people there for a long time.
Yeah. I'm gonna switch gears a little bit here. What is facing credit unions as like a threat? Like if I did a SWOT analysis right now, right? We obviously just did the S, right? So we know the strengths of working for a credit union, banking with a credit union. What are some of the threats right now? Or are there any?
No, there's a lot.
Are there?
The list is long but distinguished. I would say that their hesitation to adopt technology.
Okay.
You get the handful, like the Space Coast and the partners and that are forward thinkers.
It would be odd to be like called Space Coast Credit Union and not be forward thinking,
or digital financial out of the Massachusetts area and not be forward thinking. But the average credit union is only $400 million in assets.
Okay, which is small, by the way.
Very small.
Yeah.
I mean, 3 years ago, the average credit union was $150 million.
Wow.
So through acquisitions or just general closures, that's changed. But right now, it's the general sense of adopting technology is their biggest problem. And so you have to be able to invest in technology in order to be successful, right? But I'll take it to one step forward. You have to be able to adopt the technology that you can afford.
Yeah.
A lot of these guys are going out and buying a technology that's essentially a Ferrari. And which is great. I love a Ferrari. Who doesn't love a Ferrari? But if you buy a Ferrari, but then in turn treat it like a Ford F-150,
you're gonna break it.
One, you're gonna break it, but also you're just wasting money.
Yeah.
Right. So go out and buy a car that you, one, can really afford, but two, one that you can actually maintain yourself. And I think is always going to be the Achilles heel of a credit union. Another thing that I think is really challenging credit unions right now is their lack of understanding of their data. What I mean by that is the average credit union has no idea, what their cost per loan is, what their turn times really should be, what their proper, staff size should be. Like the actual things that the average IMB or bank will know off the top of their head.
We have to know it.
You
Like
have-
precision.
Oh, so when I started at my last credit union, and I had just come from a community bank. My first day, I walked into my CFO's office, and I reported directly to the CFO. I asked him, I was like, what do I need to hit to be in the black? Like, what do I need to find every single month to be in the black? His first response, without blinking, said, well, I don't care. Just go out and do your best. I was like, huh?
Was that because the bank didn't care? Like, I have found, and my bank clients and bank friends are going to hate on me for saying this, but I'm saying this at a very high level, tongue in cheek a little bit. But like, there are some banks, not all.
Well, this is at the credit union.
Oh, at a credit union.
Yeah.
Oh, I thought you were saying bank, because I was going to say.
So I had just come from the bank.
Oh, you came from the bank. You went to the first credit union, and asked him the question, and he was like,
Go out and do your best.
Go out and do your best. Okay.
No, so when I was at the bank, I had to hit that number every single month.
So yeah, so the
or I would get pulled into the principal's office and get yelled at.
Okay. Yeah.
And I mean, I eventually ended up backing into the number, but for me, that is a fundamental thing that every credit union needs to know, because it leads to things like the investment in new technology, the investment in new staff, everything that you need to be successful. One, didn't even know if you are successful against your peers.
Yeah.
So those are just a few challenges that in my mind are huge for credit unions.
All right, let's talk about the opportunities. Like when you're like, for me, I'm staring down the barrel of 2030. I know we're the back half of 2025, so we still have 4.5 years to go. But I still feel like that number 2030 is like staring at us. And I think a lot of that for me is because I'm anticipating more technological changes over the next 3 years than we saw over the previous 20 years. What are some of the opportunities you see the credit union space is going to be able to capitalize on?
I just actually talked about this yesterday at our event. A lot of credit unions are focused on purchase business, and that's all they talk about. How do we build realtor relationships? Realtor. And they even had a realtor panel at this event.
Good for them, by the way.
Yeah, absolutely.
Because there was a time when they didn't care.
Right.
There was a time that it was like probably what you realized with your first credit union, and the reason why your boss didn't have a number for you is because to them mortgage was nothing more than a member benefit.
Right.
We do mortgages because we have to, because our members ask us to.
Right.
They didn't see it as a revenue generator or even a profit center.
Right.
Until you came in and were able to educate them a little bit.
Right.
So I'm happy to hear that credit unions are focused on realtor business, because it shows that they've evolved a lot just in the past decade.
Right.
Okay.
But I think it goes beyond that. I think it's the focus on builder business also.
They can crush it in builder business.
We can't solve for a lot of things. We need the builders to help us. And you're right. If we have the construction to perm programs, and if we have the builder relationships.
I mean, a credit union can do spec money.
Yep.
A credit union can do CP loans. A credit union can do builder forward commitments, and probably way more flexible than a bank ever would.
Yep.
And more flexible than an IMB, because the credit union's cost of funds is so cheap compared to an IMB.
Yep. So in my mind, that is, and I said this yesterday, I was like, that's the golden ticket for us the next 3 to 5 years. If we can find a way to harness those builder relationships, we're writing our own ticket.
I love the fact you said that, Peter, because I was guessing you were going to say refis. I was guessing you were like, oh, they're so focused on realtors, they're going to miss this next refi wave. But I'm assuming credit unions are already good at refi. Like that was probably
they're horrible at it.
Are they really?
Horrible.
Like in terms of like, just offering a service to their already existing book of business. They're
you know how many times I've said to a credit union, go out and split the difference. You have 60% of your portfolio at this point in time is probably 3% paper. And the current interest rates are hovering around, we'll say, easy math, 7%.
Yes.
Go offer them a 5% interest rate. Who cares? It's better than a 3% rate. I guarantee they'll take it, especially on a cash out refinance.
Yes. And they can do that if they're truly servicing and owning that themselves.
100%.
Right. Now, they couldn't do it if they've already sold it off and retained the servicing rights, right? That'd be next to impossible to do.
If they sold off the servicing rights?
No. If they've already sold the loan, like let's say they sold the loan to Fannie, the cash window, and then they retain servicing right, would they still be able to and not lose money?
No. If they're retaining servicing, they could still do it.
Okay.
So, I mean, why not do it?
Yeah, just get ahead of the game.
Yeah, it's that 5% paper is going to be better than 3%. You're not losing money. It's already on your portfolio. I would much rather have a 5% piece of paper on my portfolio than a 3%.
Oh, and they would too, especially in today's market where their cost of funds have gone up.
And none of them are willing to take that idea and just run with it. There are maybe, and I take a step back, maybe a handful of credit unions across the country are doing that.
Okay.
But there are 1,500 credit unions that are originating mortgages. And if you only have 5 that are maybe doing that, that's a pretty small percentage.
It's a missed opportunity.
Oh, 100%.
Yeah. What about government lending? I've noticed a lot of credit unions don't even touch FHA, VA, USDA. Is that a taught best practice in the credit union space, or is that a, hey y'all, it's time for us to pivot and let's start, waking up every single day and realizing what the opportunity is in front of us, and we should be doing this?
No, they should be doing it.
They should be.
100%. I mean, it's something I mentioned yesterday also. It's these guys need to originate FHA. I mean, it's when you go to any IMB, you go to any bank, it's a fundamental program, right? They're not. I mean, obviously the IMBs aren't keeping it on their portfolios, but most banks are definitely not keeping it on their portfolios. Mm-hmm. It's if you don't have the expertise and you don't have the knowledge or the ability to manage it on your books, leverage someone else's knowledge to, 1, originate it, and 2, service it, right? So, 1, it's only a member benefit. 2, you're fulfilling your ability to help your local community with that. It's good form. When I say that, it's good PR to have those FHA loans. So why not, right? Plus, you're probably making a little bit more money.
Yeah, I mean, I have a friend of mine here in Orlando, Florida, that, 5 of his best accounts are actually credit unions. But the credit unions are referring him. Now, they have a relationship, probably some kind of a third-party origination relationship. So it's a formal legal document where he's able to compensate the credit union. But at least those credit unions, although they're not willing to do FHA and VA themselves, they went and found a local relationship, a local originator who runs his own branch who they can trust, and then their members are sent to him. And the good news for them is he doesn't work for a depository, right? So they don't have to worry about someone trying to take their banking relationship, but they are able to still have their members who need a VA loan or an FHA loan get served, and they're able to make some revenue from it. But I can't imagine it'd be the same revenue that they would earn if they were just willing to pick up the phone and call, I don't know, my girl Kim Crick over at Freedom, and then open up some kind of a relationship where either they themselves are going to be the broker and it's a TPO, or they're going to be a non-delegated, right? I would think, wouldn't that be the next step before a credit union tries to get their DE and wants to actually run through their test cases and do their own FHA?
Right. I mean, there's no need, right? Yeah. I mean, there's nothing wrong with non-del, right? It's
well, in this market right now, there's certain days that best efforts pricing, depending on who the investor is actually better than what you can get on mandatory.
100%.
Yeah.
100%. Or even go mini core if you have to.
Yeah.
Right? I mean, there are so many great options for these government loans. It's the best process. And I don't know about Florida, but there's plenty of credit unions in the middle of this country that could benefit from a USDA loan. Why not leverage a non-delegated relationship to originate those loans?
Well, this is going to be exciting. I'm looking forward to myself as a student of the mortgage industry, as a coach or a sales trainer or an advisor to the mortgage industry. I'm excited to go out to Denver in September, to be a part of the event, to support you and ACUMA, but I look forward to meeting your members, right? Because I think we can have some really fun conversations at the bar at 7 p.m. where we can geek out, nerd out, and talk shop. And I'm curious what happens when I bring my experience from what I call the IMB space and start pushing it down to those in the credit union to kind of let them know, hey, by the way, y'all can be doing all of this and it's not that hard. Mm-hmm. Like if a dude like me can figure it out, I promise you, y'all can figure it out too. It's going to be a good time. I'm excited and thank you for the invite. Was there anything that we left off that you wanted to make sure that we covered on today's episode?
I think that's it.
Perfect. How about your contact information, Peter? People want to connect with you. Are you an Instagram guy, Facebook guy, LinkedIn guy, or here's my email address, that's the best way to get a hold of me guy?
Always email me. It's just peter@acuma.org.
Okay.
Or LinkedIn.
LinkedIn, yeah. I will tell you, Peter Benjamin is pretty easy to find on LinkedIn. It'll say Peter Benjamin, CMB, and then you'll see that he's with ACUMA.
Yep.
All right, very cool. Or you can just email you directly.
Absolutely.
Peter@acuma.com. No, .org. .org. Perfect.
There you go.
Peter, I so appreciate your time. Ladies and gentlemen, he's Peter Benjamin. I'm Dustin Owen. That is all the time we have for you today. You've just tuned in to Loan Officer Podcast. We do look forward to catching you on the next episode. Peace.